All right, we've got another firm on the ropes here from a crypto standpoint. FTX is now facing a liquidity crunch and dragging the rest of the market down with it. Welcome back to the channel. My name's Ryan. I want to invite everyone to like and subscribe to this channel. If you find value in this, please let me know. Today we're going to be going over FTX and how they have completely cratered the crypto environment over the last several months, up to and including today. Fresh off the heels of the midterm election, there was already volatility in the market, and we're used to seeing crypto trade very volatile in and around earnings season, as well as political midterms, presidential debates, things like that, or presidential elections, excuse me. But FTX is a very interesting story. I'm going to break this down as simple as I can. Earlier this year, around May timeframe, FTX was facing some liquidity issues. Sam Bankman-Fried, the CEO, kept reaching out to investors, venture capital firms to try and establish more liquidity. And as you can see, that didn't work. Monday of this week, 2 days ago, on the making of this video, he actually faced a margin call. So for those of you that aren't familiar with what a margin call is, it's basically where a bank or a lending institution will ask for their money back after a set duration of time. Now, what's the issue, right? Banks obviously have margin calls on things, but you know, what's the deal here? Well, as you start digging into this, you notice that there are allegations of mishandled customer funds, money and funds potentially not being there to provide that liquidity, and there is some allegations of a U.S. agency investigation. So, what does that mean? Well, if you look here, you'll notice that Binance, the CEO of Binance, who actually mentored the CEO of FTX, decided to step in and start looking at FTX. Since they had known each other and they were at a minimum colleagues, it kind of made some sense. Fast forward to today, and you can see that as a result, they listed here, as a result of corporate due diligence as well as latest news and reports, mishandled funds, we decided we will not pursue the potential acquisition of FTX. So that leaves FTX kind of on the ropes, right? What do they do? Where do they go? Do they get liquidity? If you remember earlier this year, FTX, which again, I've used FTX. I do have an FTX account. I do believe that FTX was one of the more solid players in the crypto space. But FTX earlier this year was valued at around 32 billion, and like I said, now it's on the verge of collapsing. So let's look at this article here. Binance again is backing out of the FTX acquisition, sending it onto the brink of collapse. It's very interesting here. One of Silicon Valley's here, one of the biggest VC firms, Sequoia Capital, I remember them putting money into this, as well as a lot of celebrities. So Tom Brady, Shaq, there were several others that had put money into FTX, and now I think they're just going to have to write it off. I think they're really just going to have to mark it as just a total write-off on their balance sheet, take the L, and move on, right? No one can blame them. These things happen. I get it. But, it's just one of the things that's really bad about this is it drags the entire crypto sector down. I'm pretty bullish on crypto itself, but I believe there are a few things that need to change. I'm going to go over that in just a few minutes. One of the things also that I want to highlight is a lot of this issue came from the fact that FTX is using its own underlying currency, FTT, which is one of the coins that they had. For those of you who don't know, exchanges like to create their own coin. So Voyager had their own coin, FTX has its own coin. There were several other exchanges that have created their own coin. So basically the thesis around that is you invest money into the crypto platform, whether it's FTX or Voyager or Celsius or any of those coins end up being worth something. As the value of those increases, or even the perceived value increases, they start to become worth more to the street, and then the price of that continues to go up. You can also stake those or mint those and make money off of them. But one of the reasons that this is falling so hard is because of what's going on from a liquidity standpoint, but also using their own tokens. So It's just one of those things where you're seeing the entire industry sort of collapse here. We've got Bitcoin falling, Ethereum falling, Solana's falling. So just a really, a really unfortunate time. And until there's regulation put in, I just don't see how this is going to get fixed. Just as another point of reference here, everything is just basically falling off a cliff. I don't have much money in FTX anymore. I've moved some of it out, but you can see here that there's just a lot of issues here, and what you do have left has really started to collapse. Now I look at something like Ethereum over the last week. It hasn't, it's obviously testing. It's obviously testing the lows here, but it's just it really is. It's just right here you'll see the dip. It really is just very sad what's going on. So the last thing I want to talk about is what are 3 things to look for, for something like this in the future. So number 1, never use your own currency to back your company. So if you were to start a crypto company, or you're looking at starting a currency or investing any kind of money into it, look at their balance sheet, look at their credit spreads, look at the amount of insolvency or delinquency issues they've had, and go from there. But never use your own currency to back your company. Number 2, do not take on debt in order to make your company solvent again if you are in the crypto space. So the big thing here is there's a big margin call out for FTX. They couldn't make that call. So they started looking around for investors inside the crypto space, venture capital, private equity. They just don't have it, as the financials just aren't there. And then number 3, provide transparency to your customers regarding their funds. People that put money into your platform want to know they can get it back. There's several apps I've used, even outside of the crypto space, that have very long or delayed redemption periods. Oftentimes you'll hear that from private equity or venture capital. You shouldn't have to wait months, weeks, or God forbid, years for your liquidity, for your money to come back. So I want to just jump on here, go through this real quick. I do think things will work out. I'm still bullish on crypto. What will happen with FTX? I think they'll probably go into a arbitrage. I think somebody will pick them up for pennies. Somebody may try to roll them into a bigger platform like a Binance. But with the amount of companies that have went under this year or faced liquidity crisis due to the crypto winter, due to the recession we're in, due to inflation, due to just how bad the economy is right now, I don't know where this ends up. But I hope this is a wake-up call for not only founders, investors, third-party beneficiaries. I hope everyone's paying attention and how fast these things can turn, and to make sure that you're diversified, you take a long-term approach, and you do your due diligence. All right, take care. Bye-bye.